Have you fallen victim to what I see is the most common mistake investors make? You have done everything right. You have saved, you have invested, you have accumulated this nest egg. And right when you start to see the light, retirement, at the end of the tunnel, you get very nervous and you overcompensate and you start reallocating major portions of your portfolio to cash or other conservative holdings because you're so focused on age 65. You have forgotten about age 85. The past few weeks, we have been building this bucket strategy and we've been focusing on protecting as much as we can the near-term cash flow needs. Now we're going to address longevity risk, that risk that you may actually outlive your portfolio. It's why most financial planners build in a mortality age of 95. Trust me, none of us want to call our clients when they're 90 and say, sorry, you outlived your money. So what do we need to do with this long-term bucket? Well, there's 4 strategies I want to focus on. Number 1, asset allocation. Asset allocation at its highest level is the percentage of equities, stocks, to bonds or fixed income in your portfolio. It's one of the best ways that we can appropriately manage risk. So now that we have set back the short-term and middle-term buckets, it may be appropriate for your long-term bucket to be invested in a 70-30 or an 80-20. Because generally speaking, the longer the investment horizon we have, the more ability we have to take risk in hopes to generate a higher average annual return. Number 2, diversification. Yeah. I know you're sitting there thinking, I know about diversification, except diversification goes well beyond the American stock market. This is not just a variety of stocks. Appropriate or proper diversification has exposure to international holdings, real estate, commodities, corporate bonds, government bonds, a whole slew of asset classes. Number 3, let's control the cost of our portfolio as much as we possibly can. There are many things out there that we cannot control, but we can be very focused on the fees in our accounts. Expense ratios, advisor fees, trading costs, all of those will create a drag on the return, and that drag will compound over time. So let's control costs where we can control costs. And then finally, rebalancing. Rebalancing your portfolio at regular intervals will do 2 things for you. 1, it forces you to follow one of the primary strategies of finance, buy low and sell high. When you rebalance, you are actually buying your losers and selling your winners, which if you think about it, it's actually really hard to do that emotionally. The other thing rebalancing will do is keep your portfolio in the proper asset allocation or risk tolerance. It keeps it in check. If it's unchecked, a strategy that may have started out as a moderate growth 70-30 could balloon to a very aggressive 90-10 if we have a major market uptick. So, of these 4 strategies, none of them are groundbreaking, and quite frankly, none of them are super secret. But as with everything in life, there is a difference between knowing the answer and implementing the answer. Here's the other thing we need to consider, and this is the most valuable thing the whole bucket strategy gives us. More control over timing. Remember, the long-term bucket pours into the middle-term bucket. The middle-term bucket pours into the short-term bucket. Once we have properly set everything up, we now have control over when we need to liquidate holdings in our long-term bucket. We have a buffer. We have some time to play with. This will help prevent us from having to take withdrawals from our aggressive holdings in potentially down markets, which can be devastating to your long-term success. This is particularly true if you're forced to liquidate in a down market early in retirement. Being able to control when we push the money through the process is hugely important. And what we're talking about here is a financial plan. It is a strategy to take a nest egg, through the decumulation phase, all the way into a retirement paycheck. And most of the time, seeing this written down is all you as a retiree need to take that final jump. That's it for this week. I hope you guys have a wonderful Thanksgiving. I'm Jeannie Fisher, the 401k Lady.